Hey there, I'm Lisa Doyle with Rockcliff Realtors, and here we are, June 17, and so many people have been asking about just real estate in general, questions about the current market, having gone through the shelter in place, and now of course everything is beginning to open up. Real estate's actually been deemed essential the entire shutdown, and yet each county, over the country, and of course California was very conservative. So we've now been open for 5 weeks, and everyone wants to know what's going on. Where are we with values, prices? What are the homes worth today? What's going on with just the overall East Bay market? And so when I look at the East Bay, our East Bay is a pretty big area. Livermore, basically all the way down the 580, the 680, the 24, which is the La Miranda market, all the way to Martinez, and then down to Clayton, through Walnut Creek. So it's a pretty broad area, what most people consider our East Bay. And that area, we've always been a very active commuter market. But I have some great news to share about just the market in general. And I've been tracking data daily for years, of course, because we want to be on top of trends and what we can do to serve our clients and give advice. But I went back through, so February of 2020 was one of the hottest months we've had. So step back an entire year, go back to January of 2019. I want to give you guys a little bit of basis to look at, and then I want to show you some current data. 2019 in the whole state was actually a little bit soft, and in our East Bay, definitely. I think one of the biggest causes of that was interest rates had gone from where we are today, and we're even lower today than the historic lows, basically. But interest rates had gone from 3.5%, 3.3%, up to almost 5% very quickly in 2019, from January to about April or May of last year. And the market basically took a complete because of buyers just reacting to the extra cost of an extra 1.5% quick rise in interest rates. And so it basically slowed our market pretty significantly. And that's everywhere in the state. And then all of a sudden, end of 2019, interest rates fall again. And January and February of this year, pre-COVID and pre all the shutdowns and, a little bit of the craziness that we went through, and still, enduring a little bit of that to get through it here, hopefully sooner than later. But February was one of our most active months. And so I want to give you guys a comparison just to give you some ideas. And then I want to show you some exact data on where we are today. Here we are, June 17. So February of this year in our East Bay, which again, I would deem January and February this year of some of the hottest months that I've seen. My career, I've seen all the cycles and the crazy and the cycle, the ups and downs of the last 34 years. And in February, there were, in our East Bay, 459 homes closed escrow. Demand was high, inventory super low. Just to give you guys a comparison to today, February was a very, very hot month. We had at that time, like I said, 459 closed escrows in that month of February. And there were only 860 active listings at that time in that entire East Bay. And we had over 1,200 homes that were pending. So it was a very, very hot environment. So far, in the last 30 days, after the shelter in place has been lifted in our county, Contra Costa County and Alameda County, there's been 557 closed escrows. So we're even more active today than what we were in February of this year. A little bit of difference in supply and demand. There is a little bit more inventory today. So the market's, a little bit what you might say normal. Right now in our East Bay, there's 1,023 homes active, and there are 985 pending. So what that tells you is we're a very stable, consistent market. Whenever there's a significant inventory and low pendings, then of course you have more of a buyer market, and when there's significantly less inventory, more homes pending, then of course it's more of a seller environment. Right now we're basically pretty stable, pretty level, very active, and very strong. So I wanted to give you guys that data, and I wanted to share. So what I've seen in buyers in the last few months, even during the shelter in place, the pent-up demand was strong. A lot of buyers were coming to us asking about, when can they look at homes and when can they buy homes? And so now that we've been open and we are showing homes with specific protocol, we're keeping everyone safe, of course. Everyone wears gloves. We are using sanitizers. The buyers come in only 2 at a time. We don't have open houses. We're doing things very safely today, but still a very, very active environment. And I would say to you that there's 3 things that I think is causing our market to be stronger than maybe what people might expect, post-COVID. Some of the country that depend on tourism we might be seeing a little bit softer recovery for them. Maybe places like Las Vegas. I'm not certain, exactly how that market and those markets will evolve. But one of the biggest factors, and there's three. Factor number one, I think, in our East Bay that's causing our market to stay stronger than what you might expect is we have always had a big influx of buyers coming from the South Bay and then coming from San Francisco. The tech companies in the Silicon Valley, buyers come to the East Bay because we've got terrific schools. We have a much more suburban lifestyle. It's prettier here. There's more open spaces. It's not as crowded. And we have much more affordable home prices. So they've always come here to live and then commute to the South Bay. But I think one of the things that's causing the potential influx moving forward to be even a little stronger is now that some of the companies have witnessed their employees can be quite successful, quite productive, quite on top of things, working from home. It's from clients that I work with that are in the tech firms, Facebook, Google, Netflix, a lot of the companies in the South Bay. They are allowing their employees to potentially make changes to work from home even more than they used to, maybe a few days a week, maybe 2 or 3 days a week. So I think more buyers are coming to our East Bay because of that. Another reason is interest rates. Like I shared with you, last year's market was softer. This year we are down even lower than what we had ever been as far as interest rates. We had a client recently buy a home at 2.9%. So it's like interest rates being at an all-time low. It's just giving that extra, encouragement for buyers to jump in the market. And then, of course, inventory is super low. So what I would tell you about home values, everyone has questions about it right now. And what I'm doing is I'm including a link below where you guys can click on. We have a special website called TriValleyHomeValues.com, and we update that site several times a day with data. So it's very accurate. It's very on top of the market. You can actually submit your information about your home and get an immediate answer as to what the approximate home value of your home. Specifics like upgrades and details I can help you with how to alter the pricing based on changes that you might have made. But this will give you a great idea of what the trend of your value is. Let me know if you have any questions. I'm going to continue to keep you guys posted as we progress through the rest of this year. We're proposing that our limitations on showing processes, we can't have open houses, things like that will probably continue throughout this year. We'll see. I'll keep you posted. But if you have questions, call me anytime. Sorry for the lengthy message today, but I know it's important and so many people have had questions. I wanted to give you guys, some real good concrete answers. But call me anytime. I'm Lisa Doyle with Rockcliff Realtors, and I so look forward to seeing you soon. Take care.